Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 36 of the Forex market review. Today we're going to have a look at a pair, the pound against the US dollar. We took that last week and that was a successful trade. And then a pair that we're currently in now, one we just got stopped out of, and a couple coming up for the next week or week and a half. So let's jump straight to those charts. So the first pair we're looking at is the pound USD. So last week we took this trade. What we saw was the price pull back to this daily DSR zone and then started to push back up higher. We then go down to the 4-hour chart and we look for divergence. So before we can take a trend going back the other way, we need to see divergence to give us an idea that the trend is likely ending. So as we can see, it's stepping down and we do have our divergence, and we can see that between all of these points here, the price has stepped down and here the AO has stepped up and it needs to come back to zero line for clear divergence. And right about here, it was just at 000,444. So that's above the zero line, and that gives us the approval to continue with this trade. We then drop down to the 1-hour chart, and the first thing we look for is this first large AO to the upside. So if we go ahead and we just scroll back here, we can see a nice large AO. It's moved its way down, and we took a short position on that one and made some money. And then it reverses and we see it move back up. So when you see this first large AO, that gives us an idea that this move is wave 3 and we're looking for the pullback for 4 and up for 5. In this case, we can actually see the 1 and 2 pattern. So from down here, we can see wave 1 has started. Then it moves all the way up to here, and up there is wave 2 starts, has its pullback. Now wave 2 has to pull back to a minimum 61.8, and as you can see, if I drop this on there and I just do a zoom in, we can see it's pulled back to 61.8, just a little bit below it. So that's an official 2, but we never try to take 2 because wave 2 is a little bit hard to see. So we really can see wave 3. We then see the push up from these levels down here, start of wave 3, all the way up to the top, and then pull back for wave 4. So once we see this large AO, we come back to zero line. We then move our way up and look for that highest point. We follow it all the way back to the beginning. We can find the lowest point. So we can see roughly the trend is here. So there's wave 3 has actually started here. And then we look for our pullback to a minimum 38.2 for wave 4. Now that occurred here. So if you had have taken a position, you might have took a position here. You may have got stopped at, you might have not have. But that didn't confirm enough for me, so actually pushed down a bit lower. And then I took a position down at these levels here. Put a stop loss somewhere down here of about 60 to 70 pips. Here we got 100. Had its pullback and then rallied all the way up to 140. So if you didn't get out somewhere up here, this was some poor non-farm payroll numbers from the US, and that's the one that I saw it spike up, and then we decided to exit the trade. It came to 1 to 1.5 times our money, so not 1 to 2, but we exited out roughly around here for 1 for 1. It would have come back and met another criteria we wanted to get at for a bit less money, so we were happy to take that 1 for 1. But if you did hold on to the position and you entered down here, you brought your stop losses to break even, because as soon as it moves 1 to 1, you want to at least bring it to break even to minimize any further losses. You should have been okay, and then it would have rallied up and delivered to your target. So definitely if you held on, you could have made your 1 for 2. And that's the level move up for 5. So we're always looking for the wave 3, pull back for 4, come back to zero line. Then we're looking to trade the 5th and final wave higher. Where do we think it's going to go? Again, if you use your Fibonacci expansion tool this time, so retracement to see where it's going to possibly come back, and then your expansion. So this 61.8 level was where we got out. That was roughly our 1-for-1. We saw it spike up and then come back down. So we took an exit there. But the Fib expansion 100% level up here is exactly where it's hit right now. So if you're still in the trade, I'd be looking at getting out. The trade we're currently in at the moment is the pound yen. So we've seen it come down, hit this daily DSR zone, found some support, and then started to push back up higher. Got to drop down to the 4-hour chart. We want to see our lower low end price, if we're going to go long, that is, and our higher AO, which we have there nice and clear. Did it come back above the line? It did right there. So we have clear divergence. We can now look for our long positions. Again, the rules are exactly the same. We look for our first large AO to the upside. So you could have determined this one to be possibly the large AO to the upside. If you scroll back, you can see some large AOs to the downside. So it's probably not as large as some of these. So for me, I didn't consider that to be it. I then followed my normal rule. So if this was 1 and up, down for 2, it came back to 61.8 level. So that, as far as I'm concerned, that's 1 down for 2, up for 3. So I'm then trying to take this trade here on wave 3. I need to pull back to the minimum 38.2. And then you're looking for the final push back higher. So this did push up higher, but my risk to reward that I needed to get to a DSR zone was not worth it for me. So what I've done is I waited for divergence, which occurred to the downside, where we have your higher in price, lower AO, so that tells me the trend is likely to change. It's pulled back down, and now I'm taking this based on a 4-hour chart. So the time moved the 4-hour, that has come back to the minimum 38.2. This time this AO has come back below the line, and the stochastic is also oversold. So that gives me the indication I want to start moving higher, and I've taken my position around about these levels here. Stop losses down about here. Definitely looking at getting to break even before these highs. That will give me my 1-for-1. So up at those highs, I'll be looking at moving my stop loss to break even. And where do I think it's going to go? Again, I'll use the 4-hour chart from the beginning to the end and back down again. I'm looking at to get up to these levels here, or these levels up here. So as you can see, I'll be watching this daily DSR zone around here, and that will definitely give me my 1-for-2 to this level here. That's the reason why I didn't take that 1-hour chart position on entry, because I couldn't get my 1-to-2 around this level, but now I can based on this 4-hour move. And I'm only looking at the 4-hour chart because I have divergence with the higher in price and lower AO. And once I see that, my rules indicate now look at the 4-hour chart for a pullback and an entry. Another trade coming up is the USD. That's the US oil. As we can see, it's come back to roughly this DSR support areas around here, and it started to push back higher. Now you got to take caution that you've got this DSR zone up here. So if it gets there before you get an entry confirmation, I would consider cancelling the trade. I know I will be, but this has to depends on your rules. So do we have divergence? Lower low end price, higher AO. So that meets the criteria. Back above zero line, very clear. And drop down to the 1-hour chart. Here's a nice large AO. Now for me, it never come back below the 0 line. So I would still class this entire move as wave 3. Now it's probably 1, 2, up for 3. So I can't really see 1 and 2. So I just take the entire move. So if I can see it pull back down to roughly this 38.2, As you can see, if you look left, you can see it's bounced quite a few times around this area. So that's where I'd be looking at to find some support, getting in and hopefully risking 100 pips to that DSR zone up there. I can get 230, so definitely can get my 1 for 2. So if it continues, I'd be looking at that trade. And if I use my Fibonacci expansion tool, again from the start, end, and then where the pullback, let's say it pulls back to roughly this line there, we can see that the 61.8 and the 100% level, the DSR zone's in between there. So definitely look at these levels of moving to break even before the current highs, or at least the 61.8 would be my suggestion. A couple of trades coming up for this late this week or next week. We've got the Euro Pound, and we've got the Aussie USD, the Euro New Zealand, and the New Zealand USD. So some of these do correlate. Obviously New Zealand USD and Euro New Zealand are both affected by what happens with New Zealand together, and the Aussie USD and the New Zealand USD are both affected by what's happening with the US dollar. I think we might have a trade at the moment. We've found some resistance, a bit of a pullback on this Euro Pound. For our chart, we do have our divergence. Price is stepping down, or AO is stepping down as price is stepping up. Drop down to the 1 hour chart. We see our large AO. It's come back to the 0 line. Did it give us our minimum 38.2? It did. So if you saw a position somewhere around here, had stops off up there around 70 pips, you very likely would at least be at break even by now. And if you move to break even here, you probably would have got break even. If not, you'd be at break even for sure. But because this trade is already missed because it didn't fall enough for my liking, and now I have divergence against me on the 1 hour chart, I'm really looking at that entire move pull back higher on the 4 hour chart. So I'd be looking at this entire move on the 4 hour chart. Now if I can see it pull back, find some resistance and then start to push back lower, tighten my stop loss off, maybe 50 pips, looking at getting out somewhere down there, definitely got my 1 for 2 risk to reward. But if it keeps continuing down and reaching these levels, then I'd be looking at not taking this trade. So Aussie USD, I'll quickly flick through the rest. Finding it's come back up to this DSR zone. Do we have divergence? We still do. Higher in price, and AO stepping down. So this looks like a trade. You're looking at probably getting out at this DSR zone because you can see it's come down and found some support there. And if I couldn't, at least bringing it to break even and then riding it down to these ones down here. Euro New Zealand, 4 hour time frame. Do we have divergence? AO is definitely stepping down with clear because it's come back below the line, and price is definitely stepping up. And New Zealand USD, it's come back, it's broken through that DSR zone, so it's trying to look like get to this one here, so it may get there before pushing back higher. But we do have divergence still on the time frame, the 4 hour. So we'll be watching this one. Look, dropping down to the 1 hour chart. Here we can see 1 down for 2, up for 3. What's very likely, this could just be like an ABC movement, and this could be 1 down for 2, up for 3. But like I keep saying, just look for this large AO. It's very easy to identify. See, coming on the downside, first large AO, not this one, this is the second one, because the market's coming down, first large AO, pulled back, short it for the next move down lower. So if you can follow those rules, you'll very likely be successful. Thank you for that. That was week 36. Take care. All the best.